Hey traders, Mike Sir here. Welcome to my weekly trader live stream series where I help you with anything with regards to trading and specifically the trader mindset. All right, today what we are going to do a continuation from last week's very positive feedback from you guys about the Q&A is today is part two. Um, I'll give you guys an opportunity to ask me any questions in regards to trading. It could be anything in regards to technical, fundamentals, mental, risk management, money management, anything that you have for me in terms of questions about trading. I'm here to help you today. All right, so let's get started. All right, just again, a normal disclaimer. Please consult your financial advisor before making financial decisions. All right. So what I'm going to do is I'm going to open the floor to any questions that you guys have. So please type your questions in the question box. But what I'm going to do first is I'm going to continue on with the questions that you guys been asking me on my YouTube channel in the comments box. And I'll answer those questions first. So let's get straight to it. Again, my apologies if the text is a little bit small, but I'm going to read the question to you and I'll be able to answer them. So the first question I have is, let's be real through, day trading is really just gambling. So lots of people think that trading or day trading or any type of activity that is involving speculation, involves trying to predict something, is gambling. And you're right to a certain extent, is that there is some element of, I would say, unpredictability, right? Because we don't know what's happening in the future. There is an element of speculation, and there's obviously a huge component of risk. So I know of people who professionally gamble. Okay, so they go to the casinos, they play online poker, they go to online casinos, they do sports betting, they do it for a living, and they've been able to make a living through it, or at least generate profit through those type of activities, which you can say is so-called gambling. Well, how is that different from, let's just say, trading? Because in some sense, what you're trying to do is look at trying to forecast whether a stock's going to go up or down and put your bets on that. So what I would say is that in terms of how I would define gambling is in some sense, if you don't know the odds against you, if you don't have a system, if you are playing in a scenario where you are basically, when I say gambling, is you speculate, right, without a lot of, I guess you would say, like in terms of pure gamblers, is they let a lot of their emotions take over. And it can be related to trading as well, right? Because the emotions and the mindset does affect that. So what I would say in terms of this question is, yes, this person is right. Trading is gambling. However, if you don't have a system, if you don't have your emotions in control, if you don't have a risk management system, if you don't have the knowledge, if you don't know what the odds are, all those type of things, then you will lose money, right? So this person is obviously indicating that trading is speculation. It's kind of, there's no proven system. Well, there has been a lots of cases, as you guys seen in terms of all the traders that I profiled, that they have had some success. So go into trading, and again, I want to emphasize trading versus investing. Go into trading, yes, it's a form of speculative activity. So therefore, what you should do is you should apply a system to it. So therefore, what you um, what you are looking at in terms of trading, it's not necessarily gambling. It's just that you are trying to make the best decisions based on the information that you have. All right, so next question I have is demand and supply is very stupid when it comes to trading crude oil. You simply have millions of buyers and hardly any sellers, yet the price will still plunge down, no hesitation. So, in some sense, trading any type of commodity is really based on demand and supply. And that's what I really, when we look at the markets, is whenever you are offering any type of commodity or you are speculating on any type of commodity that will be consumed, it's natural to look at that in terms of demand and supply. So therefore, for example, if let's just say I'll talk about crude oil. So oil, any type of manufacturing, and you could sort of say in terms of gas as well, any type of economic activity, or sorry, manufacturing activity, or any type of factories would require oil to power, in terms of producing and also gas. If you have a lot of demand, or if that manufacturing, if manufacturing and productivity is doing very, very well, there's going to be a lot of demand for oil, right, to power all these machinery, right? Or in terms of, let's just say, gas, if lots of people are driving their cars, there will be a demand for that type of commodity. So therefore, if there is more demand, then it will drive prices up, right? Same thing in terms of supply. If there is a lot of demand for something, and there's not a lot of supply for that, then obviously prices will go up. Also, if there is too much of something where a company has produced, or there's too much oil on the market, for example, during the pandemic where there's everything, basically the world stopped. So therefore there was no demand for oil and there is a lot of supply, then hence the prices will fall. So I disagree with what this person says. And same thing, if you think about it in terms of a company stock, for example, so yes, you can say that I am buying this company stock because of its valuation. So on paper, it's, let's just say, worth 1 billion, but the market is only pricing in that's only worth 500 million, for example. So therefore, it's undervalued. So therefore, you should buy, right? However, what if a scenario is where this company is undervalued, okay, because it's on paper, in terms of their assets, is worth 1 billion, but the market is only valuing it at 500 million. Well, why is that? Because there is no demand for that stock. Okay, that's one thing. The other thing, okay, because you need to have buyers buy the stock, right? Also, if there are lots of sellers who, even though on paper it's worth 1 billion, but the people who are selling the stock don't believe that it's worth 1 billion, for example, maybe due to future forecasts that, yes, it's worth 1 billion now, but it's probably the valuation is going to drop, year over year or quarter over quarter. So therefore, they don't care if that's undervalued, they would sell. So you have a lot of supply and hence the price will go down. So that's what I meant by demand and supply does have a big impact in terms of prices. Okay, next one is which app should we be using for trading? Again, whichever broker that you are comfortable using. Next question is what's different in trading and stock market? Not sure what this person is asking. Perhaps the question is what's the difference between trading and investing? And this is a conversation that I had recently with a new student of mine. He has a much more of a longer term horizon, and he always kind of asks me, well, why should I care about why the stock is going down? I'm planning to hold it longer term. Well, that's the difference between trading and investing. But some of the aspects can be applied to both. So investing is really about long term. It's really about understanding and really evaluating the company or the asset that you're buying. So really check under the hood, check all the financial statements, really see if this is an investment that can hold its value over the long run. Versus trading, you definitely can do some due diligence on the fundamentals of the company, but trading is a trade. It could be you're holding it for less than a day. It could be you're holding for a few days, few weeks, few months, few years, but it's with the mentality that what you're doing in terms of trading is if a stock is going up, you buy. When the stock is going down, you sell or you short the stock. So it's more based on shorter term, less on the longer term, but yet you still need to look at some of the underlying fundamentals because you're holding it, let's just say overnight. So therefore, you still have to understand some of the fundamentals. However, it's a different approach, long-term versus short-term, and also in terms of focusing more on the price momentum. If the stock is going up, right? Like I said, the momentum's going up, you buy. Momentum stops going up, starts going down, you sell. And investing, it does not matter as much. Okay. Next question is referring to this video, how a university student made 110 million. So did a crash cause him to sell his shares? No, it's not. He was able to sell most of his shares when there was a huge frenzy for the Bed Bath and Beyond meme stock. So at the end of the day, the stock fell just because the fundamentals of the company were quite poor, and hence a lot of their stores are closing and they are declaring bankruptcy. So that's the reason why the price fell. Okay, next one is, what could a retail trader follow to know what the hedge funds are thinking? What reports? And this gentleman says 13F filings. Yes. So there are filings that a hedge fund must, registered to let the public know if they own a certain percentage of shares in a company. They have to disclose that. I can't remember exactly what the percentage is, but you can look at, okay, well, which hedge fund has been doing quite well? What are they buying? What are they selling? Obviously, it's not in real time. Usually, it's quarterly filings. So you'll see what they bought or sold in the previous quarter. So you can look at that. You can also look at COT reports, Commitment of Traders report, indicating the long and short positions of these hedge funds, whether they are believing in a certain commodity or a certain index or a certain asset, whether they're biased more towards the upside or towards the downside. Okay, so in the meantime, I'm going to answer some questions that you guys have for me. Again, any questions that you guys, please type in the question box below. Richard says, when did you realize you become consistent in profits, and how did trading change your life? When I became consistent in terms of profits, it's you hit it bang on, Richard. It's consistency. It's not really about how much I made, because quite frankly, at the end of the day, is how much you can keep, right? It's not how much you made, it's how much you are able to still have in your trading account. So it boils back down to that. Lesser volatility, lesser swings, and you said it right in terms of consistency. Consistency is not seeing your P&L fluctuate wildly. That you are able to. I wouldn't measure myself from a day-to-day perspective, even though when I did finally achieve consistency, it was through day trading. But I looked at my performance on a week-to-week and month-to-month basis. If I am profitable overall on a weekly basis, but more importantly on a monthly basis, then I have achieved consistency. The other thing I would say in terms of just knowing that you have a clear way of trading. You know what you're looking for. You're not constantly searching for the next big strategy or big idea or trying new instruments or experimenting. It's when you get to a stage where you're comfortable with what you know, and it doesn't necessarily mean that you have to know a lot of stuff. You just need to know at least some stuff very, very well that allows you to be able to consistently make a profit or overall profit. Okay, so that's one thing. Now, in terms of trading, how it changed my life, well, obviously in terms of financial security, but I think more importantly is I have always been an entrepreneur or always wanted to be an entrepreneur ever since I was young. So when trading allowed me to be able to generate an income for me as an entrepreneur, because I started several businesses on my own before I discovered trading, is I looked at trading as my own business. And therefore, how trading has impacted me or affected me in a positive way is that I can say to myself, I've now have my own business that I don't need to rely on someone else or to work for someone else, and I'm able to make a living through that. So that's probably one thing, and probably most importantly too is if you see some of my references in my videos or as well on my Instagram, that I love traveling and having this type of profession that you just need a laptop, reliable connection, allows you to be able to make money anywhere in the world. That's the biggest thing that really has changed my life. Siva, hi bro, to capital target. Okay, nice emojis. Okay, Siva says your successful trade and how earn profit for this trade. Now, there's obviously a lot. I won't go into specific details, but how I will answer the question to help you is, I think, several key things. One is if you think of a certain trade, okay, you have a trade idea in your mind or a trade thesis. You do your due diligence, you do your research, you do your analysis, and you see that this type of opportunity has happened before in the past. Whether you're looking at the charts or whether you're looking at past analysis or you actually have traded this specific asset before, but you didn't make that much money or you lost money, for example, and you see the same scenario happen. Okay, you see it forming. You don't see it happen yet, but you see a lot of check marks of this potential opportunity appearing that you feel more confident compared to other trades. So when you see that, are you just going to tippy toe in? Yes, you can. You can just try a little bit. But once the trade's working for you, you have to be aggressive. And that's where experience comes in. And that's where also looking at the analysis, looking at history, looking at how you traded last time, and that you don't want to miss out on this opportunity. So the biggest thing that I kind of want you guys to take away from this question is the biggest and most powerful trade is the trade that you feel the most confident in. It's a trade that perhaps you made money before. It's perhaps a trade that you've seen before. It's perhaps a scenario where you have been doing quite well, and you feel very, very confident in this trade, and all the trading that you've been doing recently has been working. The market's been agreeing with you, and you play aggressive. You play big, and that's how you're going to achieve your most profitable trade. And it does not have to do with, okay, I got to copy what this trader made millions in, or I got to copy what this trader did successfully, or I got to, figure out what strategy he did, or he or she did, so I can copy that. That will make me my most profitable trade. No, that's not the case. It's finding something that you feel comfortable with and that you can afford to take on a little bit bigger risk that will result in your most profitable trade. Go Shoddy says, how to predict if market is going to be a sideways. It's not really about predicting. If the price is going up and down in a sideways manner, not trending at all for, let's just say, I would say give it a few weeks to a few months type of scenario as a trader, it's going sideways. Okay, we cannot predict sideways market. However, if you were to kind of ask me, okay, what type of characteristics would you see in a sideways market? So that would be a different question. So if you see this in a sideways market, it could be where there's no news. Nothing's really happening. There's not much trading activity. There's perhaps, like for example, on Christmas Eve, or when the market's only the US stock market's only open half day, probably not going to be a lot of activity. Probably during holidays, not holidays when the markets are closed, but holidays where there's not a lot of trading, right? You'll see sideways market, or also maybe other scenarios where, for example, a stock has gone down sharply, or gone down up, or gone up quite a lot, very short period of time, and then it stops going up, or it just kind of goes sideways, right? It's just basically a pause before the next move. So there are characteristics that you want to look for if there is a sideways market. It's where nothing's really happening. There's no news, there's no earnings, there's no Fed speak, there's nothing really going on exciting in the market. And perhaps those are the type of scenarios where you do not want to trade in those markets. All right, so let's continue on with some of the questions that you had on my YouTube channel. All right, question is, could you go into Larry Williams trading? So Larry Williams is quite a famous trader. He's developed quite a number of indicators. I don't really have time to go through all his indicators, but I think his most famous one was the Williams percentage R, where it's a momentum indicator helping you identify overbought, oversold scenarios. So definitely check it out. Okay, next question is talking about BNF. Does he use leverage? Yes, he does, for trading particularly the Nikkei futures, because futures are a leverage instrument. Okay, comment about Chase Coleman. After selling a couple of homes in 2022, I'm anticipating a housing crisis. In order to buy inexpensively, has a backup plan. I've been thinking about purchasing stocks. What recommendations do you have for the best time to buy? On the one hand, I keep reading and seeing trader earnings of over $500,000 each week. On the other side, I keep hearing that the market is out of control and experiencing a dead cat bounce. Why does this happen? Okay, so it's a very, very long, detailed question. So the best time to buy, it depends, right? Sometimes the best time to buy is when no one's buying. Sometimes the best time to buy is when people are buying, right? It just depends on what type of a trader are you. Are you looking to try to look for extremely oversold conditions where you believe in a certain asset will go up higher, but it's not beloved by the market? or you want to go with the trend where the market is going up, so therefore it is an opportunity to buy. Obviously, you don't want to buy in a scenario where there's too many buyers, because it only takes suddenly the buyers to stop buying and sellers to come in will cause the price to go lower. So, again, it depends. The thing that I would kind of just comment on is, don't let the media influence your trading decision. And I still see a lot of negativity in this, in the global stock market, and specifically the US stock market. You heard me say last week, we are in the bull market. The charts tell us the prices of many stocks that have doubled or tripled have told us, and the indices are going up, so the price direction is higher. But yet the media, if out there, is really still conveying that we are in a recession, that there's going to be huge job losses, AI is going to take over a lot of jobs, causing people to be unemployed. Housing housing prices are still not doing that well. People, mortgage payments are high. Inflation, food costs, all that stuff, all that negativity, right? But the charts don't tell you that. The charts tell you that we are in a booming stock market. So that's where, don't let the media influence you. You can get an idea what the sentiment of what the media is conveying, so therefore you can read the market well. So in this case, if you were to kind of ask me, well, if there is a lot of negative sentiment and a lot of fear in this market, I think we can go higher. Until I can look at it from a contrarian point of view, is people don't believe this market's going to go higher. Well, that's where it can go higher, right? So you have to look to see whether the prices and the direction of the market is aligning with what you are hearing in the media. If the media says, recession, fear, and you can see that in the charts are going lower, yeah. Okay, well, the media is projecting that fear and people are buying into that fear. But I'm not seeing that in the current charts right now. There is, in fact, not a lot of fear amongst investors and traders. Okay, just going to finish with these two questions. Could you please do a trading desk upgrade video for your millennials and Gen Z audiences? Recommend. Okay, the 55-inch Odyssey. Okay, you've probably seen in my videos, I still use the same monitors that I have been using for, I don't know, probably 10 years. It's nice and fancy, get all these curved monitors, but quite frankly, what is working, I'm not going to change it. So the setup that I have in terms of my workstation, you can check out my latest video in terms of how to become a prop trader. I show some videos of me trading. So you can see my setup there. I use a gaming desktop that is able to handle a lot of processing power. And I have 24-inch monitors that give me a whole overview of many charts. And yeah, I mean, it's quite simple chart trader workstation setup. And again, you can go into that video and kind of see how I rearrange the charts and how I set up the screen. Okay, I got this email from one of my viewers. He's been emailing me. He says, "I'd like to get my opinion on BNF. He's an advocate for paying attention to the moving average convergence, so the MACD of a stock when going for a short-term rebound. And likewise, CIS states that paying attention to the moving average crossover of a stock is his favorite strategy to trade. However, there's some individuals on YouTube that say Such strategies don't work, such as the ones indicated here. Why is it that some traders strongly advocate for the strategy while other strategies don't? As a new trader, this confuses me, as I thought good strategy should be applicable to all traders. Okay. Very, very simple answer is, if a strategy, a strategy is a strategy. Do strategies work in all markets? Of course not. A strategy to buy when a market is going lower, do you think that strategy is going to work? No. This person referring to CIS and BNF talking about moving average crossovers working with certain settings works for them, and some traders say it's not working for them. Well, it depends. For traders, for markets that are trending, moving average crossovers work very, very well. Markets that are going sideways, moving average crossovers do not work. Okay? Because moving average crossovers really depend on a trending market, whether going up or going down. So for people, some people say, well, a certain strategy doesn't work for me, but it doesn't necessarily mean that it won't work for you. I have strategies that I don't like to trade. I think it doesn't work, but some people have the ability to make money through that, right? For example, I still have some traders and students of mine who scalp for a living. I don't scalp anymore. I used to scalp when I first started. I don't like scalping. The scalping strategy does not work well. But I cannot say to a student of mine who is having success scalping, if he's making money through scalping through his strategy, kudos to him, right? So everybody has their own opinion, because basically the bottom line at the end of the day is a strategy that you want to use, as long as it's profitable, you're seeing profits from it, then why not stick with that strategy? All right, guys. Let me see if you guys have any more questions for me. You're welcome, Richard. Okay. Question is Paquesi Blankson. I'm sorry if I pronounce your name wrong. What's the best amount to start off with? Okay, the best amount to start off with trading is whatever money that you can afford to risk or lose. Okay, and again, I'm talking about trading, not investing. So whatever capital that you say, hey, listen, if I lose it, hey, it's not going to be the end of the world. It's going to hurt, but it's not going to affect my lifestyle. Then that's the amount that you should trade with. All right, guys, thank you so much for attending my Q&A session. If any of you guys have any questions, please type the questions in the comments in my videos. I check the comment boxes in a lot of the videos that I post. So please check it out. Next week, I am going to talk about how to develop self-control. Okay? It is a very important topic that many traders have issue with. Okay? It's where a scenario where a trader says, okay, I'm going to set my stop loss. I'm going to keep my risk to this minimum. I'm going to get out of a losing trade. I'm going to do this, I'm going to do that, right? I'm not going to do this. And then suddenly when they trade, all the things that they said that they're not going to do and that they should do go out the window. So I'm going to give you guys some ideas on how to develop self-control, because again, I want to say this, very, very important. The biggest challenge in trading is yourself. Okay. It's not the markets. It's not lack of trading strategies and lack of knowledge. It's the market, whatever reason. The biggest challenge in trading is yourself. So you need to be able to master self-control. All right, guys. Thank you so much for joining me on this Sunday. Wherever you guys are in the world, I will talk to you guys next week. Take care.